Hello and welcome everyone to this morning's Daily Market Report brought to you on behalf of CommunityFT for CommunityFT members, in which we're going to look at some potential opportunities some major asset classes hold over the next 24 hours. But before we do that, let us at this point everyone embrace a quick risk warning. So if we can familiarise ourselves with the information in front, engage as much as is possible, so that hereafter any decisions you make in your trading are of a fully informed nature. Okay, on the cards for us this morning and within our sites, we're going to take a look at some economies. We're going to look at the value of those economies as is represented by their currency, and of course then we'll be taking a look at the US economy here. And then let's finish up by analysing the daily chart of crude oil. So let's get straight into this then and have a look at the charts. In front of us we're looking at the daily chart of Euro US dollar. And what we see over the last given period of time is a strengthening of the US dollar, okay, coupled with a simultaneous weakening of the euro. Now, recently or in more recent times, okay, we can get an idea of some trends or some key levels in this market. So we've well established support at this point around the 1.0804 mark. We've tenuous resistance around the 1.1418 mark, and the market has recently breached that point and had what we might call a fake out, in other words almost signaling a breakout that was a false signal, okay? And at that particular level, what could have helped us with that is the stochastic oscillator signaling an overbought level, which could have helped the trader who looks for the secondary trends in an overall trend. So if a trader had taken, let's say, a long position here, a very, very diligent maneuver would have been to have hedged that position as per the stochastic oscillator. In other words, to get the best of both worlds. And some of those techniques are what we specialise in here at the Academy of Financial Trading. In terms of fundamental news, guys, tomorrow the non-farm payroll is to be expected. It's a widely anticipated economic figure or economic report for the region, and a lot of volatility will be expected in tomorrow's trading for this market, based, of course, on that figure. Okay, furthermore, let's take a look now at crude oil. So we're looking at trends in crude oil when we're analysing this chart and signals for the same. Now, in terms of signalling trends, okay, one thing that can help us is the commodity channel index in terms of when it's range bound or not range bound, okay, and also furthermore then the 100-day exponential moving average, such that it serves, or it can be seen to serve, as support and resistance in the market, signaling moves or breakouts when the price crosses the same. The commodity channel index can be used as confirmation also. Now, in this particular case, what the market will be signaling, what we might say would be useful, okay, is to wait for the same, for the price to cross the 100-day exponential moving average, and the commodity channel index may be to not only go back into its range, but furthermore jump back outside the range, okay? But the only key problem or key lacking detail in this is how do we position size? How much do we risk? How do we position size based on something key in this chart? And one of the techniques we specialize in is position sizing based on volatility, which means at times like these, the breakouts are more lucrative, and at times like these, the breakouts or the movements would be less lucrative or risk less, okay, which means an overall smart trading system. But not only do we do that, we tailor that specifically in an individual and unique manner for each market. And that's one of the key ideas within a profitable system. So we hope this has been of help. If you'd like to find out more about anything, please do get in touch with us and we will be more than delighted to help. Other than that, then we'll see you tomorrow and have a good day.